Morning, good afternoon, and good evening. My name's Alistair Goff from the IAIS Secretariat. Welcome to the public background session on the issues paper on insurance sector operational resilience, developed by the IAIS's Operational Resilience Task Force. Thanks for joining us for today's session. During the session, we will provide an overview of the key elements of the issues paper for around 20 minutes. We'll then open the session for any questions from participants. So this background session that we're holding today is to introduce the issues paper on insurance sector operational resilience, which has just been released for public consultation. The paper was released on the 13th of October and can be found on the IAIS website. Feedback on the paper is invited by the 6th of January 2023, and feedback does need to be provided through the IAIS consultation tool, which can be found in the consultation section of the IAIS website. Just to flag that all comments provided through the consultation tool will be published on the IAIS website unless the option is chosen in the tool to keep comments confidential. So we'd certainly welcome your feedback and insights. After the public consultation, we'll consider all of the comments and make any revisions to the paper before issuing the final version. So with that, I would now like to hand over to our presenters, the Chair and the Vice Chair of the Operational Resilience Task Force, Todd Koslow and Lizzie Gilbert. Todd, firstly, over to you.
Thank you, Alistair, and good morning, good afternoon, good evening to everyone. Thank you for joining today. I am Todd Koslow, the Chair of the Operational Resiliency Task Force, the ORTF. I work for the Federal Reserve in the United States, and I'd be remiss if I didn't start with my own disclaimer that my comments today are my own and not representative of the Federal Reserve or any other entity. And so maybe the next slide, Alka, yeah, thank you. So the objective of the paper is to identify issues impacting operational resilience in the insurance sector and provide examples of how supervisors are approaching these developments with consideration of lessons learned, especially during the COVID-19 pandemic. So we recognize really that operational resilience it's broad and it's an evolving area. And this paper tries to address three specific operational resilience subtopics concerning areas the task force considers to be matters of significance and increasing operational risk, and therefore of immediate interest to supervisors. Those three areas are cyber resilience, third-party outsourcing, business continuity management, or BCM. And through this public consultation, we hope to hear stakeholder feedback on the issues paper, which will help us refine the paper and also define what possible future work the ORTF might look to in the future. So the creation of the Operational Resilience Task Force was an acknowledgement of the growing importance and potential impact of resiliency. As you can see in the paper, this risk can be fairly broad in scope and have impact across supervisory frameworks, such as the ICPS, or the Insurance Core Principles. The IAIS has in recent years published various topics related to operational resilience, such as a cyber risk issues paper and an application paper. And our goal is to try and bring these together and view this risk a little more holistically. So while the concept of operational resilience may not be new to insurers, there is a recognition of the importance to adapt supervisory regimes to account for growing resilience of insurers on digital systems, the adoption and implementation of new technologies, and the potential for insurance firms to rely on third-party providers to assist in implementation and support of some of their critical functions. The pandemic further illustrated the need for a more comprehensive operational resiliency framework that considers risks arising from the use of digital technology, outsourcing of these critical business functions to third parties, and interruptions to normal business functions due to unforeseen events, but especially for longer than modeled or anticipated. So to develop the paper, the task force undertook a variety of reviews to ensure that there was a comprehensive overview of what already existed and how perhaps we were in alignment with those existing frameworks. And so we took a review of the IAIS Insurance Core Principles, or the ICPs. We did a stock take of existing relevant publications by other standard setting bodies. We performed an information gathering exercise amongst our own members, and we had direct engagement with outside operational resiliency experts from the industry. With regard to the ICP review, the ICPs have clear interactions with operational resilience and support the sound management of an insurer's operational risks. Now, that being said, by design, the ICPs are set out as a principle-based level and thus don't contain specific detailed guidance with respect to defining operational resilience and related terms or managing operational risks. One may think about operational resiliency as an outcome of an effective control framework based on the principles outlined in the ICPs. And the review of the ICPs did reveal a number of examples of areas where further discussions or considerations for developing supporting materials could advance the sound supervision of cyber resilience, IT third-party outsourcing, and business continuity management as critical elements of an operational risk management framework, which we will touch on during the presentation. So some key issues and supervisory approaches. The next part of this presentation will outline a number of these overarching issues for insurance supervisors, as outlined in the paper, relating to significant and increasing areas of operational risk. We'll also weave in some of the lessons learned during the pandemic, touch on some of the supervisory approaches underway in different jurisdictions to address these risks, and flag various topics that may benefit from future consideration or further analysis by the IAIS and insurance supervisors. We will, while we have the structure of the paper so that the subtopics are addressed separately in the paper, the risks associated with these subtopics should not be viewed in silo, as they can be interdependent and interconnected. So governance and board accountability. One aspect the IAIS ICPs do emphasize, which can translate to operational resilience, is the importance of a robust governance structure that enables insurers to identify and respond to emerging risks and adapt to changing environments. External outreach undertaken to support the paper indicated that insurers with strong and effective governance frameworks were better placed to prevent, adapt, and respond to operational disruptions presented by the pandemic. Robust board and senior management discussions and effective challenge often lead to stronger and more agile frameworks that can adapt to an ever-changing risk landscape. And while not specifically addressed, reporting and metrics in this space can assist board and senior management in decision-making, identifying emerging risks, as well as understanding where firms may be risk accepting certain exposures as well. So another important input for insurance supervisors when devising an effective supervisory strategy with respect to operational resilience oversight is having access to a range of information, including on an entity's operational resilience framework and the potential threats impacting the insurance sector. Effective information sharing amongst insurance supervisors and across the sector may broadly help to strengthen the supervisory oversight and ensure management of operational resilience. Cyber threats, for example, have evolved, and attacks now frequently span multiple jurisdictions, sectors, industries, with implications for the operational resilience of a wider group, including insurers. And in some jurisdictions, regular forums for timely and constant exchanges of information on operational resilience have already been put in place. A number of these examples are included in the paper. In addition, some authorities now require insurers to disclose publicly or report to the supervisor directly updates on matters impacting their operational resilience, such as cyber incidents. Through the benefits of information sharing on operational resilience amongst insurance supervisory authorities within the sector and among authorities insurers are well known, and such initiatives nevertheless appear to be somewhat limited at present. In this regard, things like supervisory colleges could provide a framework for supervisory cooperation and information sharing in the future. I'll now turn it over to our co-chair to continue with our presentation today.
Hi, thank you. Thank you, Todd. Yeah, so to introduce myself, my name is Lizzie Gilbert. I work in the Prudential Regulation Authority, which is part of the Bank of England. And as Todd said, I'm very much speaking here today as the vice chair of the ORTF rather than and in a personal capacity rather than representing my institution. So thank you for that. We now turn to sort of the three subtopics that Todd identified at the beginning of the presentation. So thinking about cyber resilience, IT third-party outsourcing, and business continuity management. So taking cyber resilience first. I think the initial place to start here is around the impact of the pandemic. So the insurance sector is heavily dependent on the use of digital technologies, and this reliance has only accelerated during the pandemic as entities transition to remote working. In addition, during COVID-19, many jurisdictions saw significant growth in the use of sophisticated and aggressive ransomware attacks. So taken together, this has increased the focus on entities having in place sound cyber resilience frameworks that can withstand and react to increasing cyber risks. A key issue then for supervisors is how to gain assurance in a proportionate and resource-effective way that an insurer's cyber resilience framework is effective and robust. This is a particular challenge because cyber risks are continually evolving and growing. Forward-looking of potential threats to an entity's or indeed the entire insurance sector's cyber resilience can be difficult to quantify in a structured manner, and as such, widely agreed, standardized, forward-looking metrics across the industry are not fully developed. So, this slide really sets out that the issues paper highlights three key challenges that supervisors face when assessing the quality of an entity's cyber resilience framework. And the first of these are around the difference between point-in-time assessments versus sort of continuous monitoring. One challenge for supervisors is to identify the most effective supervisory tools and approaches to cyber resilience monitoring that can keep pace both with the changing nature of cyber attacks and also with the speed with which entities are adopting new technologies. The second key heading here refers to a lack of standardized metrics. So a consistent and standardized approach to insurers' cyber resilience can be helpful, particularly when insurers are engaging in third-party service providers that operate across jurisdiction, and one example of this might be sort of a cloud service provider. Although limited, where quantitative metrics do currently exist, sort of found in the engagement with jurisdictions and with the industry more broadly, that these can be very helpful in assessing parts of an insurer's cyber resilience framework. For example, they can be used to assist supervisors in understanding inherent and residual risk, as well as the maturity of risk management frameworks. Finally, resourcing cyber expertise. So supervisory authorities face real challenges to develop cyber resilience oversight programs due to a skills gap. The skills required to assess cyber resilience are high in demand, and there are significant shortages of appropriately qualified staff. In addition, supervisory authorities and insurers are competing for staff and intensifying the difficulty for authorities to attract and retain specialists. One consequence of skills shortages is that the advancements of supervisory frameworks and approaches may lag behind the development and changes in cyber attacks. So going forward, the paper sets out that there may be value in future IAIS work focused on topics including information sharing, practices and developments in insurance sector cyber incident reporting, or on the tools used to evaluate the quality of an insurer's cyber resilience framework, but also in developing proactive, consistent and proportionate approaches to the development and implementation of an insurer's cyber resilience framework more broadly. So turning now to the second topic, which relates to IT third-party outsourcing. So to begin with, it's very important to stress that the ORTF recognise the benefits of using third-party services. When deployed appropriately, sourcing can lead to enhanced innovation, improved customer outcomes, reduced costs, scalability, and indeed overall improved operational resilience. And we saw this during the pandemic when IT service providers enabled transition to remote work in an effective and timely manner. However, reliance on third-party providers of critical and important IT services has also become a source of potential disruption to a firm's operational resilience. We found that while jurisdictions had frameworks on outsourcing in place, the group identified that both supervisory requirements and financial institutions' risk management processes remain less advanced regarding the identification and management of concentration risks associated with the provision of IT services to firms by third parties and outsourced service providers. It was also noted that the use of very complex IT technology had increased the question of concentration risk over the past few years, and this accelerated during the pandemic. An increase in the use of non-regulated subcontractors and a growing dependency on complex supply chains to deliver critical services, all of which had the potential to move risk outside the regulatory perimeter. The group found that existing financial supervisory frameworks had inherent limitations with respect to the identification and management of the potential systemic risks posed by third-party and outsourcers, in that a single entity often had very limited visibility over the services offered by the same third-party provider to multiple financial institutions, often across multiple jurisdictions. The paper notes that many supervisory authorities require or are planning to require insurers to provide information on services outsourced to third parties. Certain jurisdictions are also moving forward with legislation or guidance on third-party service providers. And such information, including the collection of information on who exactly these third-party service providers are. And such information is going to potentially allow supervisory authorities to better identify concentration risks in the future. Going forward, the paper identifies that there may be value in future IAIS focused on possibly aligning, to the extent possible, reporting definitions and requirements for terms relevant to IT third-party outsourcing. This could include terms such as critical services, outsourcing, or third-party. And this would be with the aim of improving international cooperation among supervisors in the identification of cross-border concentration risks. We could also consider undertaking work on exchanging information on practices and methodologies used by supervisors on topics, such as the implications of concentration risk, among other points. So the final subtopic in the paper is business continuity management, which is an important topic for the insurance sector, and I think really at the very center of sound operational resilience. So there are a number of key elements related to business continuity management that the paper picks through. So the first of these is identification, which regards the capability to identify major operational incidents as a critical first step before the insurer can then assess impact and then implement any necessary measures. Second key point is established policy and governance. So a sound business continuity management framework should include an established policy with clear lines of responsibility and management processes. The paper then advises and sets out a number of challenges related to business continuity management that could benefit from further analysis or cooperation amongst supervisory authorities. These include the integration of business continuity management and risk management, the enhanced scope and testing of business continuity management frameworks, which is really exploring the question of, how do you make sure that what you have in place is actually effective? And then finally, what does business continuity management need to look like in the new normal post-pandemic world? Will this involve revising business continuity plans to ensure that fit for purpose, being remote working and hybrid working going ahead? That was everything I had to say on these points, so thank you ever so much. And I think at this point I'm planning to hand back to Alistair.
Thanks very much for that, Lizzie and Todd, and for taking us through the content of the issues paper. There's obviously a lot of interesting topics to cover, so hopefully that gives you a bit of a flavour for the issues paper itself. So that does bring us to the end of the presentation section. But before we move on to opening the floor to questions, we did just want to reiterate a few points around the consultation, which we also made at the start of the session. So So for the consultation, feedback is invited on all sections of the paper, which Todd and Lizzie have just so skillfully outlined there. In addition, there are a few targeted questions included in the paper. So certainly we would encourage you to provide your feedback and thoughts on the paper. The feedback on the paper is invited by January 6, 2023. And it does need to be provided through the IAIS consultation tool, which can be found on the consultation section of the IAIS website. So with that, I think we can now open for questions. And just to reiterate what was the information at the start of the session, if you would like to ask a question, we would ask that you use the raise hand function, which you'll see next to your name on the participant list on the right-hand side. If you're having issues with the raise hand function, you can also use the chat function to inform us that you would like to ask a question. If you would just like to make a comment that you'd like us to take note of, you can also pop that in the chat. So when you are called on to ask a question, you will need to unmute yourself. And then after you've asked your question, we would ask that you again mute yourself and lower your virtual hand. So with that, I'll open the floor to any questions. I think we've got a question from Garland Pizzuolo.
Very good. Thank you, Alistair. Hi. Thank you for your time.
Hi.
It's an overarching question and honestly one that I probably should wait to ask until after I read the consultation paper, which I have yet to do. But as you were sharing on the overarching framework of the paper and the purpose of this exercise, I got to thinking, you know, what work has been done at the IAIS to reconcile the current concerns around operational resilience to the work that companies do in preparing and providing their own risk solvency assessment reports, ORSAs. It would seem like, again, at least at first blush, that some of this is subsumed, included in, hopefully is included in various companies' ORSAs. So the question is, you know, what work has been done to reconcile current concerns on operational resilience to the information that's embedded in ORSAs?
Yeah, maybe I'll take that, Alistair, if that's all right.
Yeah, thanks, Todd.
Yeah, thanks for the question. It's a good one, and I'll just add it. You know, ORSAs are definitely one particular area where some of the content of how firms are their risk management frameworks are in place, but obviously not the only ones, and especially around different jurisdictions, there are different methods. And I think the group was somewhat trying to be agnostic of the different jurisdictions and leverage what's already existing within the ICPs. I mean, I think from the presentation you heard, we've gone there. There are some basic high-level principles around how supervisors and insurance companies can be looking around board and senior management and other governance frameworks. And so we would imagine that the ORSA would align with those expectations, but also be, you know, somewhat adaptable because, as we mentioned, the ICPs are not prescriptive, and this is a really fast-changing landscape. And we would be hopeful that when the ORSAs are written and the frameworks are put together, that it's demonstrable that, you know, insurers can adapt and pivot to deal with different types of situations. I mean, I think that was very relevant within the pandemic when firms essentially had to pivot to offsite work, and VPNs were somewhat limited. Firms had to shift very quickly, and we saw a lot of positive movement in the industry where firms' ORSA frameworks allowed for them to adapt to the situation.
Thanks, Todd, and thanks for the question, Garland.
Thank you.
We also have a question from Maria Tsani.
Yes, hi, thank you, and thank you for organizing this. I have a more kind of general question in terms of how this work will fit with the work happening across many jurisdictions. So can you provide any thoughts how the results of this exercise will fit into, as I was saying, the work already happening in jurisdictions like the EU with DORA, which is obviously cross-sectoral, and even in the UK?
Todd, did you want to take that one as well? Or
So yeah, and also maybe some assistance from the Secretariat just on the coordination that we do, at the BIS across. But we have members from cross jurisdictions. There are, to your point, a lot of initiatives going around across various jurisdictions and different ways of looking at this. Again, one of the ways that we've tried to approach this is to come at it from a principles-based level to ensure that different types of frameworks can be applicable. But we do coordinate across the different jurisdictions in ensuring that things that we address in, let's say, an issues paper and application paper are applicable across and do not necessarily try and conflict with things like DORA, for example. Alistair, maybe some more detail on how we coordinate across the other standard setting bodies.
Yes, I can do that. I think Lizzie wanted to chip in as well. So perhaps Lizzie, did you want to say a few words, and then I can touch on that point around coordination with other standard setting bodies?
Yeah, absolutely. Thanks, Alistair. So it was only to say that I think one of the most interesting aspects of operational resilience is the extent to which the risks that we're focusing on here all have that sort of international cross-border dimension. That means that whilst there are sort of jurisdiction-specific initiatives that are taking place, there's also, I think, a lot of agreement, particularly, speaking from the PRA side here, of the importance of ensuring these questions are also tackled at the same time from at the appropriate sort of international fora, because no single jurisdiction is able to manage entirely the risks when they are so cross-border in nature, which means that I think there's really an appropriate place here for the IAIS and other standard-setting bodies to play a role in coordination and bringing together those different approaches. So yeah, over to you, Alistair. Yeah,
I mean, the only final point I was going to make, which Todd alluded to, is that one of the key elements of the Operational Resilience Task Force's work is to also coordinate with other standard setting bodies that are doing work relevant to what we're trying to do in the ITF as well. So, for example, in the Financial Stability Board, they do have work streams around cyber and operational resilience, looking at issues like cyber incident reporting and the challenges associated with that, as well as third-party outsourcing. So we're certainly linked into those discussions and the bodies of work that they're doing, focused on things like convergence and developing cyber lexicons and the like. So part of the work we're doing here is to also make sure that we're linked into those other initiatives as well. I can see that we've got a question here from Rebecca in the chat as well, which is, to what extent did the task force consider the cyber insurance liabilities that insurers assume through writing policies? There is arguably a cyber insurance aggregation risk developing to major cyber attacks that would impact the solvency of insurance companies. I mean, I can make a few comments, but also would need to acknowledge that this is more the work of another part of the Secretariat. But basically, I mean, and in the IAIS, cyber and sort of operational resilience is a key theme for the IAIS, and there's sort of two aspects of our work, I suppose. One is the focus on supervisory practices, which is really what we're talking about here today. And in that case, our major work is the issues paper that Todd and Lizzie have just outlined, and which is a culmination of quite a significant body of work that the Operational Resilience Task Force has undertaken. And the other aspect is really more focused on financial stability, which I think goes probably more to the point or the question that you've got here, Rebecca. And now, our financial stability efforts in the IAIS are really sort of focused on identifying key trends and developments. And in this regard, we are also working on a piece of work, our special edition topic of the Global Insurance Market Report, or GMAR, which is focused on cyber risk. And that report will look at elements like, an overview of the cyber underwriting market, trends in market developments, current exposures, and things like that, as well as the impacts on supervision and financial stability. It is being developed by our financial stability team, and I probably can't talk to it in the detail that they could, but I would certainly make you aware that that is a topic that we are looking at through our GMAR special topic as well. Is there any further questions? I can't see any other hands up at the moment. So we've got a question in the chat from Marta. Marta, did you want to ask the question, or I can read it out here if you like? Okay, I'll just read it out. So the issues paper states that often third-party service providers operate around the globe and across different sectors. Addressing concentration risk of such third-party service providers would require a coordinated approach between the industry and supervisors from multiple countries and third-party service providers. Could you please elaborate a bit on how you envisage this work happening in practice?
I can start this one, Alistair, and Marta, it's an excellent question. If you have suggestions, we'd be willing to listen. So obviously jurisdictions are looking at concentration risk in critical third-party providers very acutely. Obviously, in the EU, you have DORA that I think is going to be coming into effect very shortly. In the US, for example, we've had the Bank Service Company Act since the 1970s, where we supervise critical third-party service providers. But to your question of how we collaborate, I think we mentioned a little bit in the issues paper, where that is potentially a question that we might want to delve into further, and have come up with things that are already existing in place for information sharing and metric tracking, things like supervisory colleges, for example, or perhaps collaboration with the FSB on some of these particular issues. But that is something that hopefully we might continue to address going forward.
Thank you very much.
We have another question in the chat here from Jane, which is within a number of regions or markets, organizations are often more than dual regulated, rather multi-regulated on the same or similar themes. Is there going to be a platform for mitigating or responding to the same and similar reviews?
Maybe for clarification, it sounds like, is that supervisory reviews rather than, let's say, particular incidents that occur?
Jane, are you on the line there? Supervisory reviews, Todd, yeah.
Yeah, I mean, I think the IAIS has done a lot of work on group-wide supervision. And I think the principles that we've laid out, and the fact that we're continue to rely upon the insurance core principles here and the existing frameworks, somewhat go to that question of, we would fall back to, how jurisdictions coordinate today, and so that the supervisory burden is not duplicative or multiple layered on top, and that information is shared across. Lizzie, anything particular?
I think part of this as well goes back to some of what may feel like some of the perhaps more prosaic recommendations for areas of future work around how do we make sure that when exchanging information effectively, we're using terms consistently as supervisors, that we're being as proportionate and streamlined in the information requests that we put out to firms. So I do think in the issues paper, there's a lot of sort of quite interesting recommendations for ways that we can make sure that we're working in a streamlined and sort of effective way as we can, especially for those, you know, international insurers who are subject to often, you know, several different jurisdictions requirements.
Yeah, and I think the questions that we've been seeing, thank you for them, very much align with the conversation that we had in the issues paper. And if you remember, an issues paper kind of outlines a lot of those thoughts and questions around there, but doesn't necessarily take the leap to trying to address them. One of the potential, and I know we were going to talk, I think, Alistair, we're going to talk about our next steps. Potentially is the IAIS has a format called an application paper where we might take up some of these issues and the questions that you are asking and perhaps try and make some suggestions and ways that jurisdictions potentially could address some of these issues.
Thanks, Todd and Lizzie, and thanks for the question. Jane, I can see your mic's playing up, so hopefully I asked the question in the way it was intended. Any further questions? Just scanning the list, I can't see any hands up or any questions in the chat box. We'll maybe give it a little bit longer.
Maybe, hello everyone, this is Marta. So maybe just an instant question that now came into my mind. In respect of the non-regulated subcontractors, how far do you think we should go in, you know, keeping an in-depth oversight and monitoring around these when we have them in the value chain, which we obviously do with the major IT providers? What is going to be requested from the firms in terms of subcontractors?
Yeah, I mean, I think I'll touch on that maybe really briefly. Different jurisdictions obviously have different approaches here. And I think it really is going to continue to develop in the future as to what are critical service providers, critical third parties. And I think there's been a lot of work done at the jurisdictional level to have firms identify who their critical service providers are. And you know, with DORA, we'll bring some of them into closer kind of supervision. And like I said, in the US, we have some existing law that's already on the books. And I think in other jurisdictions, we'll continue to kind of think about how do you look at that regulatory perimeter and bring into scrutiny some of these providers that are providing these critical services. But it'll be up to each jurisdiction to kind of figure out what makes sense for themselves. I
think if I may come in, I think one very interesting aspect, I think, to the concept of operational risk more broadly is that it can provide a helpful lens when thinking about outsourcing and subcontracting and the chain, in that it can somewhat simplify things. So if a firm is concentrating on sort of making sure that it's able to sort of encounter, withstand, mitigate, recover, and learn from the impact of a really broad range of events, the extent to which we need to have oversight over that chain, that outsourcing chain, can sometimes be answered by or one way to view it is to think about, well, to what extent do I need assurance over my chain of subcontractors to provide me with that outcome of operational resilience? And what does that assurance actually need to look like? So it's definitely not an answer. There's many ways of viewing the problem, but I think it's a great question in that it links us back to that sort of umbrella term and that outcome of operational resilience that the paper is really seeking to get to grips with.
Yeah, Lindsay, it's a great point, and I think as a potentially a tangible example of this, and I'll extrapolate a little bit, is every firm relies upon the electricity grid in their jurisdiction, and typically that's a concentration risk. There aren't a significant amount of different providers that they can pick from or have redundant electricity provider in place. Most firms have backup plans in place or mitigation strategies if the electric grid or their connection goes down. There's various ways for them to do that. I think and so you would think that electricity provider being a critical provider, I think as firms continue to rely on third parties for some of these services, they will continue to adapt what their mitigation strategies are as well. And to Lizzie's point, a good operational resilience framework allows firms to think about these issues and plan.
Thanks
very much.
Todd and Lizzie. Thanks for the question, Marta. We've got a question from Tobias Rossman.
Yes, hello, this is Tobias. My question also relates to the concentration topic in the IT third-party outsourcing area, and the concentration topic seems to be looked at in the paper and also in the discussion through the dimension of the counterparty, like concentration in a large service provider. Has there been a thought going into whether that needs to be the only dimension of concentration, and why is that if so, why is that the most important one?
Who wants to take that one? Lizzie or Todd?
I'm happy to take a shot, perhaps works for you. Yeah,
Go ahead.
I think it's a good question, and I think when we talk about concentration, it's possible that concentration is actually a bit of a short-term way of describing perhaps poor outcomes. In that, by concentration, I think what we're actually talking about in some respects is where you have financial stability implications that is not possible for a single insurer to manage, because and that can be because there's concentration in terms of number. It could be that there's concentration in terms of difficulty in moving between different providers, and so I think you're really right to pull out that the topic of concentration and what actually is concentration risk, and what do authorities talk about what are we actually referring to when we talk about concentration risk is still a very open and live debate among regulators. And so it's something I would very much encourage, if you feel like there's aspects that we haven't perhaps fully taken into account, like do bring that out in any feedback that you give back to, you may wish to give back to the consultation.
It's concentration risk is like it's like an end result of where the firms are kind of moving. Again, they're critical services, and if you look within the paper, we have the FSB definition of cyber resilience. But really, if you think about resilience in of itself, it's the ability of a firm to continue its operations. And the issue of concentration typically comes up where similar firms or even firms across sectors are using one or a few providers for similar services. And in the question of that provider having operational resilience issues, therefore kind of continues down the supply chain and causing other operational resiliencies because the firms themselves did not have very good resiliency frameworks or redundancy or alternatives to kind of put in there. And I go back to my very rudimentary example of electricity providers. You can say that the concentration risk is in one particular provider, However, firms do have the ability to mitigate that risk. And it's the question of how do they assess the risk and how do they actually address and mitigate and put a control framework in place around that that comes into play. And then that question of concentration risk is kind of a result of all of that.
Thanks for the question, Tobias. Do we have any other questions? We've got a few minutes left in the session. If there's any more questions. Okay. Well, I can't see any more hands raised, and I'm just checking the chat box as well. And I can't see any in there either. Well, with that,
Sorry, there's one new question in the chat now.
one new question in the chat. Ah, thank you. From Colin. Question from Colin is that APRA has issued CPS 230 operational risk management consultation paper, which is similar to this. Any thoughts on that? Thank you. Todd and Lizzie, I'd have to be racking my brains to go remember whether we did review the APRA paper as well. I don't know if you recall, but we can certainly check.
I haven't read it specifically. I think it came out in July, so it was somewhat in parallel.
Mm-hmm.
Obviously, we have membership in the IAIS from APRA. I would say I look at that similarity as a positive, in that we are not divergent, and can go back and like I said, I have not read that very critically, but I do think that relying on some of these principle base allows us to kind of have similar views across jurisdictions.
Yeah, maybe just to make the point as well that we do, as part of this process, have the consultation, and after which we review comments and feedback, and also we'll have an opportunity, I guess, to review material that's come up in the meantime as well, and look at whether there's aspects of that we can incorporate into the paper. So thanks for flagging that, Colin. Okay. Well, I think the questions are starting to dwindle. I can't see any hands raised or new questions in the chat. So Liz and Lizzie and Todd, perhaps if you're happy, we might look to wind up the session at this point. Certainly from my side, thanks very much to our chair and vice chair of the Operational Resilience Task Force for the presentation today and fielding the questions. And thanks very much to everybody that is tuned in to the session. I know it's very early for some, like Todd, and very late. I can see some colleagues from Japan and other countries in Asia. So I know it's very late for you. So thanks very much for tuning in, and we hope you found this an interesting session. As we've said a few times, the consultation on the issues paper is now open and will be open until January 2023. So for more information on that, you can visit the IAIS website. We will be looking to put a recording of this session up on the website as well. So if you have colleagues that weren't able to catch the session and do want to catch up on it, we will put that up on the website. So with that, we'll close the call, and thanks everybody again for participating and listening to the session. Thanks very much.